Ladies and gentlemen, welcome back to the Dorian Show. Please hit the subscribe button and the like button. Today, we're just going to jump into talking about Silicon Valley Bank. For those who don't know what happened, or you guys are interested in more videos about what happened, well, you came to the right place. So basically, over the weekend, last weekend, when you guys watch this, there's a bank, Silicon Valley Bank, that basically banks like all these like tech companies, tech startups, all the wineries in the Bay Area. They're a commercial bank. They give all these big companies or startups like they bank with them. And then over the weekend, we realized that they were out of money, and they didn't have enough money to support all these companies pulling out their money. So once the rumor started, everybody was trying to pull out their money. It caused the bank run. So they were insolvent. They shut down. And basically, all the rich people asked for a bailout, even though the government, these rich venture capital funds, and all these people are saying, "Oh, this is not really a bailout." But at the end of the day, it is a bailout. Okay, and I'm going to explain that a little bit. So, what caused the? Well, let me first tell you what Silicon Valley Bank is. Right, Silicon Valley Bank is a commercial bank, meaning everyday people like me and you, we can't just go and like drop off and deposit like a couple $1,000s or a couple $100s for us poor folks. You need to be part of this industry that they support, which is mostly tech startups and some wineries out in Northern California. Like, they would bank with them, and the reason why all these companies decide to bank with them is because they have basically special treatment, right? They have access to loans and line of credits that otherwise you won't be able to get. Okay, so basically this bank would say, hey, if you bank with us, we'll give you this line of credit. And they're giving like line of credits to companies that basically have no earnings. Okay, they're like losing money, but they still have this line of credit because all these venture capital, rich people that basically give money to all these startups hoping they'll make it big. Like, they have all this money coming in from venture capital. And there was a lot of money coming in the last couple of years, especially with the pandemic. Interest rates were low. These venture capital people were trying to make more money with their cash because they're basically losing the value of their dollar through inflation. So they're just investing like crazy, just giving out money to all these startups like crazy. And all these startups in return would deposit all this money with this bank, and this bank they didn't know what to do with all this money, right? So they loaned some of it out, and they actually took some of that money and invested into other venture capital, which is kind of messed up if you ask me. So a lot of these companies had backing from the bank that they were banking at, right? So let's say I had a business and I deposited Bank of America, and in return Bank of America invested in my bank, which it's kind of shady if you ask me, but I mean, it's not illegal, so sure, why not? So what happened is they had all these deposits, right? Because interests were low. Venture capital was like giving out all their money to all these startups, and all these startups will put their money into the bank. And the bank, thinking this low interest rate will last forever, decided to invest like a significant chunk of that money onto like long-term treasuries and bonds and mortgage-backed securities. And by long-term, I mean like 10 years and over, which is kind of insane to take like a short-term money and invest it long-term, right? You're basically taking deposits that these companies are putting in that they could like deposit and retrieve withdraw, I mean, as much as they want, and you're taking that money and you're gambling that they're not going to leave into 10-year long-term bonds. That's insane, dude. That is insane. And what happened was, because they bought all these like 10-year bonds at like a annual interest rate of like 1%, 1.5%, and then the Fed all of a sudden started raising interest rates like crazy. I think within 1 year, the Fed, Jerome Powell, raised rates like from 0 to 4.5%. Which if you guys don't know, when interest rates rises, the value of the bond basically goes down, right? Like, why would people buy your bond at 1.5% when there are new bonds coming out for like 4.5%? So the value of those other bonds will come down naturally. And then there was also a double whammy, right? Now that interest rates are high, these venture capital are not giving these startups money anymore, right? Because money is they're like, we'd rather just put this money in the savings account or buy bonds and stuff to earn that money. Like we were just burning cash, and it's not the it's no longer worth it for them to do that. They don't see that as a way to make money anymore. So then the venture capital pulls out money, right? All of a sudden, people are spending less because there's inflation. People are starting to lose jobs. Higher interest rates are going on. People are starting to save more now because the interest rates are high. All of a sudden, these startups are having difficulty making money or getting money. So they're still burning money. So guess what? They have to use that money in their bank account at a faster rate. Before they had money coming in because people are like, take our money. What we're going to invest? We're going to invest. Now there's no investors. They need to use the money in the bank. So they're withdrawing. And then all of a sudden, Silicon Valley Bank's like, oh shit, like we might not have enough money to pay everyone back. So they started to have to sell all these long-term bonds at a discount, which creates basically a hole in their balance sheet, right? So they're like, so this is one of the most shady things ever is in a public traded company, if they're buying bonds, they don't need to tell you it's a loss until they actually sell. So like if your bond is worth $100, but because of the 10-year bond is worth $100, but because of the higher interest rates, like today's value is only worth $70, they could keep it on their books for $100, which is kind of crazy, right? But anyways, they had to sell some of these because people were spending money, they're withdrawing, and then they're like, oh shit, like we sold a lot of these bonds already, and we don't want to keep selling them because we don't want our balance sheet to have like a giant hole, like $1 billion or $6 billion loss, right? They don't want that. So they decide to raise money to sell stocks. And this triggered all the rich people that were like, oh shit, like these fools might not be solvent anymore. And Peter Thiel, one of like I actually respect this guy. Like he's one of the probably smartest guys ever in he's part of the PayPal mafia. He's made really good decisions. So what he basically did was he invested a lot of money into all these companies, and he told all these companies basically on a chat he told them to withdraw all their money, right? And because word travels, right? If you guys are all in the same like a business, if everybody's in tech people know tech people. So if like the big cheese is telling me to withdraw my money and I have another friend in tech, I'm going to tell my friend too. Like, I'm like, hey dude, this is what this guy is saying. You should do this. And word spread and people started drawing money. So I think on last Friday, what day was that? That's the 10th, March Friday the 10th. I think they withdrew. All these tech startups withdrew like 40 something $billion in one day from this bank. And they were shut down. They were like, we are insolvent. We need to close. So they closed the bank. I mean, the FDIC took control of the bank. And all of a sudden, all these venture capital people, all these rich billionaires, right? They went on Twitter. They're like, oh, come on. We need a bailout. We need a bailout, right? There's like, if you guys, let me go back. If you guys don't know, if normal people like me and you or whatever, like younger people that don't have a lot of money, like most banks that you put your deposit in, your money in, they insure up to $250,000, right? Which to a lot of us is a lot of money, and we don't have that. I don't have that, right? So we're insured, but then at Silicon Valley Bank, most like 90 something percent of these people had like millions and millions of dollars on it. So all that money was uninsured. So all these rich people, all these billionaires and venture capital went on Twitter. They're like, oh, we need the government to back all deposits, not just 250. We have to think about the regular people. We have to think about the mom and pop shops that can't pay their payroll, who can't pay their rent. People are going to lose their jobs. People are blah, 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 right? They're trying to say like the government needs to step in so we could protect these everyday people. But of course they're lying, dude. Like they are trying to protect themselves. You know what I'm saying? Like these venture capitalists have so much money. So if these companies they invested in, all of a sudden don't have access to their money right away. You don't think these venture capital people are going to give them a line of credit? You know what I'm saying? Like if I if I invested in Google and Google's like, hey, there's something wrong with our bank, and I know Google is a good company, and they're like, hey, can you like lend me some money for like maybe a couple weeks, a couple months, and we'll pay you interest so we could cover expenses. I will give them money. I mean, I don't have that much money, but I would give them money, right? If they needed like, if they came to me and they're like, hey, we need like $10,000 from you to let us borrow, I'm gonna give them money. You know what I'm saying? Because I know Google is good for it. I know they're a good service, and once the bank resolves itself, I'm gonna get that money with interest. So these venture capital people are lying as if like everybody's money is all of a sudden in this bank, and if this bank goes down, all these businesses are gonna go out of business, and no one's gonna help them. Everybody's money is all of a sudden in this bank? No, dude, that's fucking bullshit. So they play this game and they're like, oh man, please, we need to think about mom and pops, the everyday Americans. And sure enough, Sunday night, just 2 days later, Janet Yellen basically came out and said we're gonna back all deposits. Everybody's gonna get all their money back. No one's gonna lose a single dollar in deposits. Sure, the people that own stocks, own bonds, they're gonna lose everything, but everyone's deposit is gonna be good. The problem with this is that all the deposits are from tech these tech startups with millions and millions of dollars, and like Etsy, who have like $600 million in cash is sitting there, which is fucking insane if you ask me. What kind of dumb person thinks that's a good idea? Like, I'm not even rich, and I know that's not a good idea. And they're like, oh, we didn't know about the FDIC 250,000. I'm like, what? Like, everybody knows. Everybody I know knows, and we're all poor, and we all know it. How are you telling me that you manage a company? You're like the CFO of a company, of a multi-billion-dollar company. You don't know this? They're just all lying to you. So anyway, so the government, the FDIC basically guarantees them whatever, I don't know, like getting like $50 billion and more. Basically, they basically say that we're going to guarantee everybody's deposits at every bank. Because how are you going to guarantee Silicon Valley Bank and not guarantee everyone else? So I think another bank closed 2 days later. Signature Bank, deposits guaranteed. So who else is going to bank? Who else is going to fail now? And they're trying to say like this is not going to cost the taxpayer any money, because the government is basically loaning the banks these money, right? They're saying it's not that they don't have any assets. Like, they have assets. They're just not liquid right now. They're worth something, but they're worth less now. So we're going to give them a loan, and then they're going to pay us back later when they sell off their stuff. And the taxpayers don't pay anything. We don't pay anything. Well, number one, the FDIC is giving them all this money, and they don't have that much money, because the FDIC is only insuring the $250,000 of us regular bankers, and they don't even have that to cover all the bankers in the world, right? They're just like, oh, I think this is enough to manage the risk, but now you take a $250,000 insurance, and then you're basically paying off people that have millions and hundreds of millions of dollars. They're not going to be able to cover that. And they try to sneak this in. They're like, we're going to do a special assessments of the bank. So if for whatever reason the FDIC could not cover all the deposits, they're basically going to charge all the banks to kind of pay for this bailout. And here's the issue. Like, the money doesn't come from anywhere. All the banks' monies are our money. They're depositors' money. So even though they're saying we're not technically taxing everyday Americans, you are taxing us when you tax the bank. When the banks have to pay for stuff, it's coming from us. That is passed along to everyday Americans, right? We're already getting low interest rates on our savings account, like at Bank of America. It's like 0.00001. Now we're basically not going to get not even that, because they're going to have to pay to cover all the charges that they're going to need from this bailout, which is insane. Second of all, the fact that they're saying these guys are everyday people, it's a fucking lie, okay? Like, everyday people like me and you, we didn't have access to Silicon Valley banks, all the pros of banking with them, you know what I mean? Like, all these small tech companies, these starter funds, these startup tech companies, these bigger tech companies, these wineries, these rich companies, they all bank with Silicon Valley Bank because there are benefits, and a lot of the benefits I talked about already, right? They're like, oh yeah, we'll get you access to people with money, other venture capital investors. We'll connect you with them. We'll give you a special line of credit. If you give your money with us, we'll give you lines of credit that no one else will give you because it's high risk. You know what I'm saying? They'll give you that. And we don't have that. Normal people don't have that. And that is a real benefit, you know what I mean? Like I have a line of credit right now with the bank, but it's because I had a house at the time and they're like, "Oh, you're a responsible lender, responsible borrower, so we'll lend you a chunk of money." But I can't get like a line of credit for like millions of dollars, you know what I mean? Like so we don't have access to that. So already like not everyday people will have it. Number 2, they're basically, and we're trying to stop inflation around. This whole country has inflation. Rent's going crazy. Like my rent here is $2,000 a month, dude, for like this piece of shit. Look at this. $2,000 a month. Housing prices are expensive. I sold my condo and I can't buy a house. Like I just can't afford it because of inflation. Food has gone up, gas has gone up, everything has gone up. And then that's why the Fed's raising interest rates. Like maybe that will bring inflation down, right? And this bank crashing is actually going to stop inflation, or is going to slow inflation down. Like I actually don't buy a lot of these people losing their jobs or not being paid their employees, because there's other people with money that are willing to give them a line of credit if they are a good company. Okay. And what's going to happen is they might not get all their deposit back, but they'll probably get a lot of it back. Because these bonds that this bank has are still worth something. They're probably not worth par value, or they're not worth its full value, but they could probably get 30 to 60%, maybe even 80% of their money eventually. And these venture capital don't want to give any of that. They don't want to lose any of that. You know what I mean? So they're like, oh, let's help the everyday people. Let's help them. These people will get laid off. No one's going to have jobs. It's going to be terrible. Well, is that they don't care? They actually don't care about people losing jobs, because every time I hear in the news that Facebook or Google or Walmart or wherever, whenever they say they're going to lay off people, guess what? Their stock goes up, because people don't care about workers. They just care about their own money. And all these venture capitals like, oh, we're going to have a bank around this country. All these banks are going to shut down. It's going to be all bad. If it starts at Silicon Valley Bank, then it's going to go to First Republic. Dude, at the end of the day, they only care about themselves. And sure, maybe some people will lose jobs. Maybe some tech guys will lose jobs. Maybe some of these like terrible tech startups, no one will give them a line of credit. They're going to have to shut down and lay off people. Well, I'm like, well, so be it, dude. That's what happens. People get laid off all the time. You know what I mean? Like maybe a lot of these like highly paid workers will get laid off. You know what I mean? Maybe that'll bring prices down. Maybe that'll bring rent down. Maybe that'll bring housing down. You know what I mean? But instead, they're like, oh, we're going to bail everybody out. Everybody get their billions of dollars back. Even though they took a risk when they saw the benefit of Silicon Valley Bank. They saw the benefits of banking with them. They get to keep all the benefits. We don't get any of that shit. We don't get a credit line. Oh, but when it fails, we need to bail them out because the mom and dad pop shop, mom and pop shop needs to help. Everyday people are gonna lose their jobs, which is fucking bullshit, dude. And if they are, so what, dude? People lose their jobs all the time. Maybe that will like, shrink the wage gap. But no, they don't care. And this is just another example, like. You who's bailing these bankers out? People in East Palestine is actually literally they're the one bailing out these billionaires. You know what I mean? How are they paying for it? They're paying it through their FDIC insurance. If their insurance is unable, if their $250,000 insurance isn't able to cover these millions of dollars, then the bank they're going to bank at is going to have to pay the price. And guess who's going to suffer from it? The people from East Palestine putting their money in, dude. It's fucking insane. Anyway, I was like, I think that's all I have right now. It's just a short pod. That's crazy. I mean, I don't know. I don't know. I mean, they're not gonna. They might probably not raise interest rates anymore. You know what I'm saying? Because they're afraid. They're like, if interest rates are go up, these banks are gonna die, and we're gonna have to bail them out. We don't have that money. We don't want to do that. So instead, they're probably gonna not raise interest rates. They're gonna let it run crazy. Inflation's gonna go crazy, and the poor people are just gonna get poorer. So that's it. I hope everybody here enjoys being poor and keep being happy being poor, guys. Okay, so that's all I gotta say for this one. I'll talk to you guys later. Peace.